Hello and welcome to another monthly update for Sydney, Melbourne and Brisbane. We're in May and we're talking about what's happening in April, and we've got some amazing figures to share with from SQM Research about the property growth and potentially the market turning. But joining me today is Zoran from Enfolio Property Advisors in Melbourne and also Your Empire Melbourne office, and also Zoran Solano from Property Buyers Agency and Your Empire in Brisbane. And while I just get those results up on the screen, Lauren, do you want to just jump in? We won't talk about interest rates yet, but obviously there's been some growth in the market, and obviously that's quite a big change.
Yeah, it's really interesting. We had the last 2 weekends in a row in Melbourne, we've had really high clearance rates, both above 70%, which definitely shows market stabilisation. I've said and we could genuinely feel like all of my advocates that were out on the road on the weekend could feel that there was increased buyer confidence, which we haven't seen for some period of time. So it felt really encouraging. I don't think we're going to see sort of significant price increases until such time as we have rates come back, but the stabilization was definitely there, and it's quite obvious to see when we look that there's been some growth across the board in Melbourne over the last the April figures.
Yep. So just to read off some of the results for those people that might not be able to read it on a small screen, Sydney is up 1.3% positive for the month and 3% for the quarter. So that's actually the third month where we've had rises. And obviously a big one was last month in April. For Melbourne, we've got 0.1% for the month and 0.3% for the quarter. I think that's the second month of increases. And Brisbane, we've got 0.3 for the month and 0.1 for the quarter. And again, I think that might be the first update. So it obviously looks as if Sydney started in February, Melbourne in April, and then, Sydney, Melbourne, and then Brisbane. And so all of those results are starting to look more and more positive. And so again, I think I read something online that A&P before were quoting about a 7% drop for the year. Then they're talking about a 3% rise. And I'm saying, well, Sydney's already had a 3% rise. So look, you're probably going to have to adjust your figures yet again. Zoran, what do these numbers mean to you guys in Queensland?
Yeah, I think a significant undersupply throughout the a significant undersupply throughout the Easter period made a massive difference to our market. It really restricted the available properties on the market at that time, and what that translated to was really strong buyer activity throughout that Easter break, and that sort of has caused us to get some uplift in price and in value. So we're definitely seeing the market recover. Very short time on market quality property as well, so a sign the market is improving.
Now, obviously, depending on when you're watching this video, last Tuesday we had another rate increase. The previous month had obviously been flat. Most of the economists and most of the people around town were thinking that May was going to be flat as well, but we had that 0.25% increase. And so I guess for a lot of people, we've got growth on one side, but we've got rising interest rates on the other, which is obviously a sign that inflation's still there. For me personally, I actually don't think it's a bad thing. Look, I would have loved from a personal mortgage perspective to not have any rate rises, because when you've got over $10 million worth of debt, 0.25% is a hell of a lot of money. But at the same time, I don't think it's a bad thing. We just need to curb this inflation. We've just got to get everyone to stop spending. And then if we're going to get this capital growth, it's almost the perfect thing for investors, because we'll then have the interest rates hopefully coming off, still getting some capital growth. And so our cash flow is going to improve as well. Lauren, jumping to you in Melbourne, what are your reading into the interest rates?
Yeah, look, I mean, obviously it's a pain in the ass, because it sort of gives you a little bit of it gives buyers a bit of a dip in confidence, but we knew that there was going to be another one at least, and I'm just happy that it's out of the way, right? So if we haven't reached the top of the rate rises, we're really, really, really close, I would have thought, because we had the whole last month and now we've had it go up again. And I just it's like ripping the Band-Aid off, just get it done, let us deal with it, and then people will start building their confidence again and stabilizing. So I agree with you. It's not great, because obviously all of us hold property, and it means that, we're paying for it as well. But I think as soon as we can get this happening, get it out of the way, get some certainty that we've stabilized, then we can all sort of get on with it. So I'm really aligned with your thinking on that, Chris. But I also agree, it's going to help us with regards to what we buy, and buyers getting into the market and their ability to this is going to create some softening in some segments for people, because we're going to see people having to release some sort of B and C grade properties in order to liquidate and have some cash.
Now, we've been saying for the last year, it's been a great opportunity for buyers because with less buyer confidence, there's obviously less people at auction. There's a better chance of getting a bargain or at least getting something without paying so much of a premium. Obviously, Zoran's phone is ringing off the hook as we already speak. Is there opportunity? Like, Zoran, I mean, obviously, we've been saying that. People have been trying to time the bottom. It's almost a massive sign now that we are slowing on the interest rates. We are maybe going to get some drops. We're already seeing growth. Surely now has got to be the time. If you don't get in now, it's going to escape you.
Yeah, guys, we had a client who was searching actively 12 months ago. For personal reasons, suspended the search. About 3 months ago, they came back and said, hey, back on track, let's go. And in that time, the market had sort of dipped and then recovered. And he was like, oh, I thought, might have been a better buying environment. And it's like, well, actually, we're on that recovery phase now, but probably back to similar figures you would have had to have paid 12 months ago anyway. But there's still great opportunity. I actually just purchased for him, and the bank val came in $21,000 above the contract price I secured it for. And then I was able to get $5,000 off for building and pest due to some really minor stuff that's come up. So still some great deals to be had out there, but there's definitely signs of that market shifting.
And do you think it makes a difference whether the property has got tenants in there or if it's going to be vacant possession?
100%. That's exactly what we're seeing. And that example I just mentioned is a reflection of that. Those sellers were adamant of wanting 720 to 730,000. We had to negotiate for nearly 3 weeks, but we got them down to our desired 700,000 price point because all the other buyers were owner-occupier and wanted vacant possession, and they just simply weren't able to do that due to a long-term tenancy in place through till the end of the year. So investors right now have a really unique opportunity to purchase at below market value due to the effects of a tenancy in place.
Now also, Lauren, we've talked over the years that not all property is the same, not all suburbs are the same. And the statistics that you read in the media, either talking about the property market, which is the whole country, or they're talking about a whole state or a whole capital city. So in the areas you're dealing with are all properties starting to rise now?
Well, no, absolutely not. I think that actually this is really interesting. I was talking to a client about this just last week. She bought a property in a self-managed super fund, and it was an off-the-plan townhouse in an area where all the houses in the area have increased in value, but townhouses have decreased in value. Now, some of them are in the same street. I think the reality is that it's not just about buying a property or buying real estate in a soft point in the market. You actually have to get the right piece of real estate. And that's why having some advice along the way is so vitally important, because you could go to it in Melbourne. You've got a suburb like South Yarra, which is AAA blue chip Melbourne, highly desirable. And one property, if it's the wrong orientation, attached on both sides, no parking, it's not going to perform. Whereas if you get, the right orientation, you get a bit of land at the back, a slither of land, maybe it's not landlocked on one side, you're going and you've got street parking, it's going to make the whole difference to how the growth of that property performs. So it's not as simple as just buying real estate.
And look, certainly what I read into these capital growth figures is so many people been trying to time the market over the last 6 or 12 months, and then suddenly they miss it. So typically in Sydney, I think our average purchase price is about 1.8 million, that we bought properties at 500 grand. And also a lot of the 2-bedroom units are between kind of $1 and $2 million. But even on $1 million, that 3% represents $30,000. And that's 50 or 60,000 on our average purchase. Now, again, some people have been quibbling about the buyer's agent's fee. I mean, typically a buyer's agent's fee is about 2%, so about $25,000 for GST on $1 million, which, look, it is a lot of money, and it's 40 or 50,000 on a $2 million property. But at the same time is, if a buyer's agent can get you in the market quicker, and then suddenly you're then making that kind of 50 or 60 grand because you bought a few months before anyone else, then certainly that really kind of justifies the numbers beyond having a professional going off and looking at for you. Another thing to obviously...
Can I
Yep.
interject interject there. I think it's really important to add that a lot of people see a buyer's agent's fee as being a cost rather than an investment. And I think that that is fundamentally where they get it wrong. Our average buying time is probably a bit longer than both of yours, but it's 12 weeks. Now, the most buyers, it's taking them 12 months because they don't know what the values of the properties are. They're looking at the wrong real estate. So this all adds up to giving them value. And it's a bit of a no-brainer, but obviously we've got an agenda. So when you tell people about it, it always comes across as a sales pitch, but that's the vast reality.
Yep, at 100%. And I think the same thing with my accountants is I was using Deloitte Private, which is obviously one of the biggest accounting firms and probably one of the most expensive versus a suburban accountant. But when you're investing millions and millions or tens of millions of dollars, I want to know that the accountants have got my back. And if I've got the best in the country saying, no, Chris, I think you're doing the right thing. I think you've brought all of those factors into consideration. Sure, you've got a lot of debt and the interest rates are rising, but we believe in what you're doing. We've done all the spreadsheets and it's a cracking strategy. That's the thing that helps me sleep at night, and that's worth a fortune to have. And again, the numbers are insignificant, even though it could be a high hourly rate or a high amount I'm paying every year. So again, put it all into perspective. Zoran, as a final thing for you, you obviously get involved in quite a lot of renovations. You're actually doing your own home renovation at the moment as well. What's going on with renovation costs, and how's that as a strategy at the moment?
Yeah, I think for us being very active in that renovation market, we've seen that there's a real opportunity if someone is open to adding value to a home or investment property. I believe in this market, we can buy the renovated properties below market value and really enhance the growth and rental yield by simply doing some cosmetic refurbishment. We keep our trades very busy, so they're very loyal to us and very easy for us to coordinate for clients. But the general public has a big fear at the moment that they can't find trades. The trades are very expensive. And while the cost of construction has increased, when you've got good relationships with these people day in, day out, that's where you get quality product, quality service at a fair price. And that's where we're finding that at the moment, we're renovating 1 or 2 properties a month for our clients, whether that's buyer's agent, purchase, renovate, then rent, or old clients of ours looking to enhance the portfolio with a renovation of existing property.
Wonderful. So look, thanks for joining us again this month for the Sydney, Melbourne and Brisbane property update. Just remember, there's property growth out there. There's major signs that the market is turning. Sure, interest rates have gone up 0.25%, but in the grand scheme of things, it definitely looks as if it's slowing. And there's a lot more talk about fixed interest rates dropping and variable interest rates dropping over the long term as well. So please take this opportunity. The biggest regrets that all of our clients have is that they didn't buy more property quicker. And that's something that we've seen over the decades. So certainly if you want to reach out to any of us, if you want an update of Melbourne, speak to Lawrence Staley, Infolio Property Advisors and Your Empire in Melbourne. And for Brisbane, Zoran Solano, Property Buyers Agency and Your Empire in Brisbane. And obviously myself, Chris Gray at Your Empire in Sydney. Thanks for joining us, and we'll see you again next month.